Kia ora whanau, and welcome to another episode of Get a Job, Get Healthy with Costas Enterprises. I am very, very happy to announce that I have hit a major milestone in Sharesies, which I'm quite proud of, and we're going to go over that today. This may be a couple of videos put into one, so just bear with me. My recording time is only 30 minutes, unfortunately, with the screen and share using the program that I'm using. So, yeah, I thought we would go through it and see what we've got. So, first and foremost, we'll go through all the fun things. My contact details will be up on the screen very shortly, same as my Magic Mind code. So, basically, it's if you use code Costas20 at the Magic Mind checkout, what will happen is you will get 20% off your initial order. And if you use the subscription service that they've got, you'll get roughly like 57% off your first order, which is pretty awesome, considering, if you get the 30-day one, you'll get even more off. So you get quite a good, significant discount there. So that's Costas20 with Magic Mind. I've talked about Magic Mind before. It's pretty amazing. I haven't used mine today because I've only got a few left, and I'm saving them for next week when I've got Armageddon, Wellington, which I'll probably do something about it. First off, Happy Easter. This is a little bit of a late episode. I wanted it to be out early, but the reason why is you'll see when we go to the Magic, when we go into the actual Sharesies app, why I wanted to do that. So, first and foremost, you can contact me, doncostas@gmail.com. That's DON for Nike, COSTAS @gmail.com. You can also find me on my website at www.costasenterprises.business.blog. You can also find me on Instagram and Twitter at the Kiwi Don. Feel free to reach out. Let me know how you're going, what's going on. I will be also, we are talking about Sharesies, so there will be a Sharesies share link in the description. It's valid for 1 month, so if you want $5 for you to basically try and invest yourself, if you are based in New Zealand or possibly Australia, then you can actually take advantage of that as well, which is quite cool. Sorry, bit of a cough, unfortunately. So yeah, feel free to click the link in the description for the Sharesies link. You'll sign up, you verify your identity, and then you're away laughing. You'll get $5. I will also get $5, so I'm putting that out there. Same with the Magic Mind, the code 20, Costas20. If you put that code in, I do get a slight payment from that. I want to be completely open and honest with you guys about that. But at the same time, you're actually getting a really, really great deal if you get that subscription service. But even if you don't, 20% off is still better than nothing. So, what is the major milestone? So first off, the first one, I've actually got two major milestones. The first one is, as you can see, I now have $5,000.80 invested. So, that means my total balance is $95,833. So I'm $5,000 off that $100,000, which is crazy. Granted, that is because of my KiwiSaver, also gone up. Now, I did do an episode about KiwiSaver previously. This will all be part of the playlist, Investing in Shares for Dummies by a Dummy, which you will find at the end. I'll put the playlist in there, so you can actually click that and go through my other videos, and you'll go through from the start where I've gone. But this is the first time you're going to see my actual investments. So this may be, as I said, maybe a bit of a clipped together video. But let's go through the main thing. So, number one, we have $5,000 invested. Huge, huge milestone. Wouldn't expect it. However, the biggest milestone is this over here. I have now finally hit $1,000 return. Now, the last time I spoke to you guys, I was sitting at about 670, which is pretty crazy when you think about it for investing, to jump in literally about a couple of months, maybe 2 months, to jump to $1,000 invested as profit. So this is my return. As you can see, my simple return is $24.53% return. Total amount invested is $4,113.27. So hence the total $5,080.12 total. So I'm really, really happy. As you can see, there's my chart. If I click into my chart, you can see, my journey began with just a simple $55. And then I increased it. I took money out. You can see the whole process. So in the end, I've put in 4,011 and I'm up 1,000. So you can see it's been quite a significant jump as well. So as you see, most of my stuff is ETFs. I'm a big believer in ETFs, so that's the electronic traded funds. But also, I'm starting to invest in companies that provide dividends and also high return companies. So we're going to go to the bottom first because those are the ones that are not performing, and I want to show you guys with openness exactly what it is that I'm doing. So first and foremost, you see, I've got a lot more than what I originally talked about. Before, I had like maybe, I think at last count I had 9. Now I've got a little bit more. So first and foremost, we have Green Cross Health. So this is currently trading at $1.02 New Zealand. And the reason why I've got the Green Cross Health, I've talked to you guys before about it, is my gross dividend yield. So as you can see, 46.29%. That's pretty crazy. But when we go to my investment, I am down $25 because of this. However, the main reason I have this share is not for the up and down of the actual share, it is for the return of the dividend. So as you can see, from before I put in, this is when I had $30 in, I had a $1.17 return. Now I've got like close to 120 in there. So as you can imagine, that's going to be a little bit more of a return when the dividend hits up. Now, I've talked previously about the dividends. We'll go over them very quickly. They pay out, as you can see, 3 times a year: April, June, December. April, June, December. So each time I'll be checking that out. So the next one, let's go. Apple. So I finally invested a little bit in Apple. I do not have much in this. As you can see, it has gone down. I bought it here and here. So I bought 2 lots in there. And it's gone down since then. So it's not doing well. It is currently down 9.93% from when I bought it. I've put $45 in total. I'm down $4.47. So again, not huge, but the main reason I have this is, as you can see, an Apple share is $171.48 US dollars per share. I have $40 in it, and out of that $40, my gross dividend yield is 0.55%. Doesn't sound like much, but for every share you're getting 24 cents, and I got 4 cents for nothing, basically, with having much less than what I should in there. So this is one of those investments that with Apple, I'll probably hold it for a long time, because over the long time period, that's when you get your value. And that's the one thing I really, really want to push with everybody that's listening, everyone that's watching, is whatever you invest in, don't day trade. Just hold. Hold, hold, hold. Yes, there's going to be times when it goes down. Like Apple. Apple is one of those huge companies, but it's down 10%. And I'm going, that's okay. I'm fine with that. Because I know it, and eventually it will go up. In fact, now is when I would be buying more, because I can just go bang, bang, bang and try to push it out. So this is the latest one I've bought a little bit into. So this is AbbVie. Now, the reason I bought AbbVie is over a long term, as you can see, they've gone sort of up and down over the last 1 year. Over the last 5 years, they've grown quite considerably. And I've bought it kind of at its peak. But it's currently gone down. It's down 3 cents. So as you can see, I'm down 0.10. But the main reason I have it is it's another one of these gross dividend yields. Now, you'll see these dividend yields aren't usually quite high. 3.4% is not much. With AbbVie, because they've been trading for quite a while and they're dealing in pharmaceutical companies, then what it is they are actually one of these companies where it's okay to hold it for quite a while. So they increase their dividends all the time. They increase their dividend payouts as well. So that's doesn't sound like much, but if I grab a couple of these shares and hold it for 10 years, next thing you know, it's starting to pay for itself. And that's the main thing I want to get to people is don't be afraid to buy something at its peak and wait. Because if it's a sound company like AbbVie or Coca-Cola or one of those sorts of, one of those other companies, if you buy it at its peak, it still might go up. Nvidia is a perfect example of this. Nvidia was trading at $62 5 years ago. Now it's at $978 a share. Now, granted, they don't have a dividend payout. However, the growth that they've had, it's almost worth putting it in now at its peak because it could grow to even more. And that's not a GameStop share or anything like that. Like, that's not a meme stock. Realty Income Corp. I've talked about this one before. This is ticker symbol 0. Okay. Again, another US share. It is $54.99 US. And the gross dividend yield is the main reason I have this one. So this is a 5.76% dividend yield. Now, I currently have $225.61. So I have 4 shares in this. Okay. As you can see, a return is currently 0.95%. So it's only just in the positive. For a long time, it was in the low. However, the reason I have this particular company, it is a real estate, or a realty income corporation, is a real estate investment trust, or a REIT. Okay, that's where it's a whole lot of real estate that's put together and they pay for it basically, and they pay their providers. When I click into the gross dividend yield, they pay every month. Let me repeat that. This ticker symbol, even though it's low, it's $54, they pay 25 US cents per month per share. You have 4 shares, guess what? That's $1 per month. US, that's going back into investing into it. If you hold this for 54 months, you buy yourself a new share. So one of the things I'm going to be doing is hopefully getting it to the stage where it's earning close to $54 US per month. Now that's a long time away because it's about, you got to basically put in about 10,000 US dollars, which I don't have. Let's be real. I'm doing bit by bit. But if I can put 10,000 in, it's earning a share every single month, meaning that payment goes up and up and up. So getting another $54 per month, getting another, and then every share I get is another share. So then it becomes 54. So it's the compounding effect. This is a perfect share for compounding effect. If you, look, I don't know how the share is going to do in the future, but given they've been paying, as you can see, 25 cents, 25 cents, 25 cents, 25 cents, 25 cents, 25 cents, since May 2023, they pay every single month. Before that, it was 24.85, so it's close enough to 25 cents. So for a whole year, if you hold this one share, you can just hold one share for a whole year, you're going to get 12 times 25 cents. I mean, people say investing is hard. If you invest the right way, it's not that hard. Like, you have to do your research, and I've done my research on this particular share. That's why I'm investing into it. A monthly payout does not happen very often. Okay, as you can see, I'm getting 25.7 US per share on the 1st of April. And then last month, I got, like, I can go to, if we go to my investments, you'll see it's only just come in the positive. It's only just come in the positive. Before that, I was in a lot less than that. But there we go. Dividend auto invest, 61 cents. 61 cents. Put $6 in. Nothing 1 month. $53. 120 US. That's how much I put in. So for a while, I had nothing. Now I'm starting to get paid. 61 cents. 61 cents. And if I hold it a little bit longer, that 61 goes to $1. If I buy another share, that goes to, like, I can try to buy one share every pay, which is not a lot, I'm not going to lie. But then when I'm putting my money in different things, then it starts growing. Costco. I love Costco. Not just the shop to go into, but the share. I've talked about it before. Doesn't sound like much. Like, it's up $1.25, and you're like, that's nothing. I've got 0.15 shares. They already paid me 4 cents. But if we go to dividends, if we go to overview, they have a 0.56%. Look at this graph. In 5 years, it was $228. Now it's $785. I'm telling you this because if we go to the last sort of 1 year, I am buying almost at the peak, and it's still going up. It went down for a little bit, and now it's going back to where I originally bought it. I cannot make this up. This is crazy. This is crazy. This is another share I want to hold a lot more of in the future because they pay out. And then they do special payouts as well. So if we go to the overview and we go to the dividend yield, past dividend yields, you'll see on the 27th of February, they did a special thing. They had too much money. So they paid a $15 US share to every shareholder, no matter how much you own. So if you own one share of this, you get paid $1 every dividend, which doesn't sound like much. But just an extra $15 that gets reinvested and buys you more of a share, I mean, you can't go wrong with that, really. That's pretty crazy. And this isn't the first time they've done it. They've done it about 3 times in the last 5 years, 6 years. First, it was a $15 was the last payout. Then they did a $20 payout before that. And then before that, they did like a $12 payout. It's not much. But when you're only getting $1 per quarter, when you normally get paid out, and they're giving you, oh, here you go, here's $24. We have too much money. They can pay off their debt and still be fine. It's a pretty good company. Now, Schwab US Dividend Equity ETF. So with this particular one, this is SCHD. This is another one of those, like the Vanguard S&P 500. This is their competitor. As you can see, I bought here, and then I bought some more just here. Okay, so if we go to 1 year, 6 months. So, and then I just bought recently at $80 at their height. Okay, that is the dividend yield. Okay, I'm up $1.67, so I'm up 4%. It's not much. I've only got $40 in here. Okay, so I don't have a lot in there. I'm half a share basically. Over here, they've got 3.33%. Okay, so for every share, they will give you 74 cents, 65 cents, 66. So you can see they pay pretty well. So Schwab, US Dividend ETF, pretty good. Visa. Now we're starting to talk more about some of the companies that I own now that I'm putting money in. Now I have about 1 share in there, maybe a little bit more now. Yes, I've got just a little bit over 1 share. Now the reason I do this is, again, the dividend return, 0.75 cents. It's not much. And they pay 4 times a year. No. February, May, August, 4 times a year. Last payment was 52 cents US. In the last 1 year, look at it. It was down here. It's now up here. 5 years ago, 135. Like Visa and MasterCard are good ones to put into. Why? Because people use their services everywhere. I will probably buy some in MasterCard before. For the $291 I've got, I'm up $304 at the moment. So as you can see, I'm up $13 since I bought it. This is one of those ones where over a long time period, the more shares you have, the better. They increase their payments to shareholders. I can't make it up. It's pretty cool. Cook's Coffee Company. Now, I was lucky enough to be selected and asked if I wanted to put some money in for Cook's Coffee Company, which is a New Zealand company. As you can see, their high a year ago was 35 cents. They went down to 20. And they needed to raise capital. As you can see, it's not good. It was $1.30. It's just gone down, down, down. However, when they said, you can put some money in, and I did. I put $20 in. I'm already up $1, so I'm up 5%. And this was literally a couple of days. However, look how many shares I have. For $20, I got 20 cents a share. And I was like, cool. So this is one of those companies where I might hold it for 10 years. And if I've only put $20 and that raises, if it goes up 10%, well, I've already made more money back, If it goes down, it goes down. It's one of those ones where it's $20 as a risk, but it's not that much of a risk, if that makes sense. Okay, ANZ. So, ANZ Group Holdings. This is also dividend reinvestment plan available. I thought I already had that, but yeah, cool. So, I bought it over here in February, and look at it now. So I bought it at $28. It's now $31.90. So I'm up $1.05. Doesn't sound like much. I've got $19 in there. So I don't even have a full share yet. That'll be the next thing I'm buying, basically. And when you see my KiwiSaver, when I do an update on my KiwiSaver, you will see that as well, basically. That this is a crazy investment. Like you can put more money into the ANZ Group holdings as a share than if you put it in the actual bank itself, and you will get a better return. You do not get 5% return. You do not get that in the banks. You get 2.4%. Same for Westpac. Same deal. Coca-Cola, you guys know I love Coca-Cola. I bought it a couple of times. I've sold it. I sold one of my shares, which was stupid. I should never have sold that share. I bought it 5 years ago. So there we go. I bought 5 years ago. I bought it at $49, and now it's like steady at close to 60. So yeah, it's pretty crazy. My investment, I'm up $25. I have $290.67 in there, meaning I've got 5 shares. Simple return, 8.94%, but this is another one of those dividends. See, 46 cents every share. It's $1.50 every share. Doesn't sound like much, but when it's getting reinvested, and then that's compounding over time, it's quite good. Another share that I'll be buying more of is Coca-Cola. And the reason for that is because of Warren Buffett has 10%, just 10%, of his main company in Berkshire Hathaway in Coca-Cola. He earns $4 billion every year because of that. Like, you can't go wrong with it. Smart Shares Asia Pacific ETF. This is a fairly newish one. I bought it over here. It's just soared a little while ago. So I bought it low. I bought it at like $2.20. It's now $2.50. Doesn't sound like much. It's 30 cents. But they pay 2% return. This is a New Zealand share on the Asia Pacific ETF. So I'm up $1.48, but I'm up 10%. I've only got $15 in there. It's not bad. It's not bad. Like, there are some shares that you can put in now and not pay that much. Like, if you grabbed my $5 Sharesies link that's in the link below, then you will get 2 shares out of one of these. Like, it's crazy. Or you can go back to the Cook's Coffee one, buy $5 worth of 20-cent shares. I wouldn't suggest that. I would suggest going with one of these sorts of ones. Much better. Berkshire Hathaway. Now, we're not even going to go try and attempt this, but as you can see, it's $633,000 per share. I have $113. I am up $18. The reason I have Berkshire Hathaway, this is Warren Buffett's company. Okay, this is where he makes his millions upon millions upon millions. But this one does not pay any dividends. Okay. The main reason I have this, and I will put more into this, is because look at the growth. Look at the growth. I can go to 1 month, and it's gone up. Like, it's crazy. It is nuts. And as you can see, for 113, and I'm up 18, that's pretty good. A 15% increase is nuts. City Office REIT. Now, I've talked about this before. This is another one of those ones that provides quite a good little dividend return. 7.95%. And they pay it like 4 times a year. So, my investment. Put in 107, up $21. So, up 19.78%. Now, the one thing I will mention about this is even though the high return is 7%, and it's pretty good, it's almost 8% return over a long period, that's going to be great. This does fluctuate a lot, okay? I'm not going to lie, this fluctuates quite a bit. Okay, Vanguard S&P 500. You guys know I love this. This is huge. This is the one share that I think everyone should own if they want to escape the rat race and they want to do better. Look at this. 5 years ago, I bought it here. Look at how it's just growing. Just growing. I could buy it at $480 a share. I bought it at $280, and I had a tiny amount in there. I sold a couple of these shares. I was stupid. I shouldn't have. But I now have just over 1 share. Okay? $448. I'm up $122.78 on that share. That's up 27%. Like, I can't make this up, guys. Vanguard 500, S&P 500, the VOO. It's all you got to remember when you're searching for it. The Smartshares US 500 ETF is the New Zealand version of this. So, they actually copy the VOO, and this one is USF, okay, in New Zealand X. As you can see, they don't pay as well. If we go to the dividend price, they only pay 1% dividend yield. Doesn't sound like much, and it isn't much. If we go to my investment, I'm up 35% for this one. That's $417 I've put in. I am up $146. I have 35 shares because it's only $15 a share now. And I bought it when it was like $8 a share. But if we go to our dividends, each share, each payment, I'm getting $1.83. So it's gone up from the times that I've gone. And when I originally had it, I had 11 cents, 16, 36. So it's just reinvesting each time. Like, you can't go wrong with this sort of one. Right, Smartshares US Large Growth Fund. I think this is the last one because, as you can see, again, I bought it low when it was like $6 a share. It's now $10. It's almost doubled. And you can see that here, 47.71% return. It's nuts. I've put in $828. I am up $395 for this particular share. Like, almost double. Come on, guys. Now, the problem with this one is they stopped paying dividends. However, this is one of those ones where I probably won't buy any more of this share. I'll be honest. I will just hold it and leave it and let it grow and let it grow and let it grow and let it grow because I don't need to worry about the dividends. However, I have set a notification for $7. If this is $7 a share, I will buy it again because that's what I bought it at like ages ago. I don't expect this to be going down anytime soon. As you can see, back to the normal. So, what does that all mean? Well, I am up $1,000. Huge milestone. I am absolutely shocked. I love this so much. So much. And it also means now I have $5,080.12 value. I mean, it's crazy. Schwab up 21 cents. There's my dividend order. I've got my dividends to automatically reinvest. So they do. They automatically go in. That's what that means. That should be... Oh, pay to auto. It's on. Oh, yeah, it is on. Cool. Yeah, I think auto invest is one of the best things ever now. Some people do. There is an ability with Sharesies where you can use their AI and they will auto invest for you. So you just put $20. If you don't know anything about investing, you don't want to know about investing, you just want something as a nest egg, do it. It's easy. You just transfer money and it's done. And it can be something simple as $20. Now you see my money over here has gone down. I have put that into shares. I have put that into my own money. These are just savings accounts. KiwiSaver. Very, very quickly, this was where I started. $85,967.65. I am up almost $2,400 in less than a month. Come on, guys. In a month. Today is a month. And I'm up $2,399.14. I cannot do that with my normal state service retirement scheme. Since putting my KiwiSaver in here, it has gone nuts. And when I talk about ANZ and Westpac, look at this, up 4%. If we go into the 4% one, $31.90 a share, you saw it. Put $4,000 in, up $186. Like, it's crazy, guys. It's crazy. I don't know what to tell you. Even this one. So let's go with this one. This is my base fund, okay? The Smartshares US Growth Fund. Annual fee, 0.51%. As we go for our investments, put in $60,384.12, okay? Up $1,540.63. Up 2.55%. Doesn't sound like much, but when you realize that this comes in and then in at $1,540 $2.63. I mean, compound. Like, these will come back. These are $1.26 per share, New Zealand. So that means that 1,000 gets reinvested into this. I mean, I can't put it anymore. Like, the compounding is nuts, guys. Like, if you're not doing anything, at least please listen to me here. Put your money in something that's going to grow. Okay? Don't buy frivolous things that you don't need, like I used to. Like, I'm wearing a North Face thing. I did not pay full price for this. I got this from a secondhand shop at like $2. I've stopped doing that sort of stuff. I've stopped buying things that I don't need because I realize that there's more value in buying things that I can sell or buying things that I can do and then taking that money and investing it. So I talked previously about Askables and how great Askables was. Well, one of the things I did with my Askables is every so often when I get paid, I'll take the money out, it goes into my PayPal, I'll put it straight into my Sharesies, and then I'll invest it in what you saw before. Like, very soon with Sharesies, they are going to do voluntary donations for KiwiSaver. Now, for me, that's huge because I have not put anything in. So when you're looking at these payments, like the $85,000 that I got there, I have not put any money in here for almost a year. Now, when I originally had the State Service Retirement Scheme, which is what it was called, it was up to $90,000. Me and my partner, we took out $10,000 for our candle business, Onion Garden, which you can find on oniongarden.com. That meant it was at $80,000 for a year. In that year, it grew to $85,000. And just recently, the start of this month, 1st of March, I finally made the switch to KiwiSaver. And I finally made the switch to Sharesies KiwiSaver, where I can control what I put in. That is the huge thing about the Sharesies KiwiSaver, is you're not just picking balanced or conservative or whatever plan you decide to pick on. You pick your main plan. Yes, you have to have a main plan. But then you invest in the other parts. So you take some of your money and go, actually, I know a lot about this company. I want to put it in this. And then they will do it for you. Now, the maximum you can do for each of those is 5%. And at the moment, you are restricted to just New Zealand companies, selected New Zealand companies, not all of them. But, as you can see, guys, in a month's time, I have grown $2,399.14. So I'm at $88,662.17. I mean, come on. If this doesn't show you the power of compounding interest, $8,662 in a year, people. In a year. I don't know what more I can say. Like, just even thinking about the fund I had it in before, which was an AMP conservative fund, it grew to about 5,000. And then in 1 month, it's grown 3,000 because I invested in the things that I know about. I mean, you need to. And for all those with with 401ks, my amazing American viewers that watch, if you've got a 401k, why are you not investing in the VOO as a start? Especially if you're brand new. If you are brand new to investing, put it in this, leave it for 20 years. Trust me, you won't be disappointed. Like the VOO or even the Schwab, the SCHD, this one here, is another one that you could invest in. Like, one of the big things I tell people is pay off your debt. Pay off your debt. Do what I did. Pay off your debt straight away. Because I was $36,000 in debt I paid it off in 2 years. And that wasn't doing any fun investing or anything like that. That was me going, okay, I know I need this much to change. What do I need to do? I have to consolidate all my debts first. I did that. I went to my bank and said, please help me. I need to get out of debt. I don't want to be in debt. I want to do this, and with my life. And I did. They consolidated my debt. I was lucky enough to get a loan. Now, the loan was 24% interest, which is the best they could do for me. And I paid that loan off in 2 years. Now, the loan itself was $24,000. The other money that I spent, I had to get a new car because halfway through COVID, my car died. And considering, as you guys know, I was looking after my mother, I had to travel from my flat to my mum and every day and look after her. I needed a car. So I paid an $8,000, $500 car. Bought it brand new. And paid that off as well. So when I say $36,000, that's what I mean. There's quite a bit of money in there. But I paid it all off. And while I was paying it off, that's where I learned about the interest. That's when I learned about the compounding. How if I pay the minimum, I'm never going to pay it off in time. There's always going to be a bigger debt because the interest compounds. So I started seeing when I was paying it off. Now, when I was paying my debt off, when they first did it, you could look at it through your app, but you couldn't do anything with it. So if you wanted to pay it off, you had to go into the bank, pay them directly, or call them up and pay them directly. But you could only do that every 6 months. They would not let you do it any other time. Like, you couldn't go in every week and just go, here's $100, put it on my debt. Here's $100 extra, put it on my debt. You had to pay a minimum amount, and that amount was what you did. I always tried to increase my minimum amount, but they wouldn't let me. Then, my bank, ANZ, which I'm investing in now, had a feature on their loans where you could pay a voluntary amount automatically. Now, when I mean automatically, I mean you could click it, say how much you wanted to pay, click OK, and it would go through. So you wouldn't have to go through calling someone. You wouldn't have to go into the bank. And when that happened, everything changed. I saw that because I was getting more regular updates when I was paying it off with a bit more extra. Like every time I'd pay an extra $100, it was putting me in a little bit of hardship, but it was taking thousands off my interest and saying, oh, you'll have it paid off at this time. Oh, you'll have it paid off at this time. Like I was on a good pay. I was getting around $2,000 a fortnight, which I know sounds like a lot, but when, rent was about $500 a fortnight, and then interest was like my loan repayments were like $400. So I was getting $900. So I felt like, oh yeah, I was getting a lot of money. But then we were paying petrol, we were paying this, paying this. I was leaving myself about $200 to play with everything. And then I went, okay, now that I can do a voluntary donation to my loan, let's do it. And so I did. I would put an extra $100 off. And I'd live off about $100. Now, luckily, we were in lockdown for like 6 weeks. During those 6 weeks, I was still getting paid my normal pay. And I was living on maybe $70, $80 a week. The rest of the money was going on my loan. And I cut so much interest out of it. I paid it off. So they were saying that I could pay it off in 4 years. I paid it off in like, not even 2 years, like, sorry, about 18 months. I paid that debt off. Like, I saw how much that little bit extra, just a few, like an extra $100, was taking out so much interest. Like, then I started seeing compounding in this stuff, in Sharesies. Like, as you can see, the Vanguard 500, I have one share. I bought it 5 years ago. I was here. Look at its growth in 5 years. I haven't even been investing. Sorry. I haven't even been investing 4 or 5 years. We're in 2024, and I bought it in August 2020. And this was one of my first shares that I bought. I mean, as you can see, it's only a 1.33% return. It is not huge. It's not huge at all. But that one share that I bought at $312, as you can see, look at what it is. It's go to like upcoming dividend, $1.80 on one share. Is it a lot? No, of course not. But it's better than nothing. Like, I can't stress this enough. Like, this is one of those shares that you need to do. Start off with. Or, if you want, try mine. Try O, Realty Income Corp. It's a lot less than the other one. But if you get paid every month, as you can see, I bought it a high. Now look at it, it's low. And if I wait, and this goes, you can see it's starting to go up a little bit. If it goes up even more, then this part goes up. It's like a twofold. You're getting paid in dividends, and then you're getting paid in returns. So if I do decide to sell this in the future, whatever this is, I get a profit here. But this is one of those ones where I will not sell. I will hold it because I want to get to the stage where soon this is earning one share every single pay, every single month. Now that's a lot. That is a lot. That's close to $10,000 invested US. But if it works, every time I get a new share, reinvesting in itself, then the real compounding hits. Because then I'm getting a share and more every time. A share and more every time. There is method to my madness. And I hope people are listening. So, all that done, I will share the Araha very soon. So I will put one of these refer a friend links. It'll be this link here. As I said, I will get $5. You will get $5, but you got to share it within 30 days. Sign up to my Magic Mind. Costas 20. If you want to try Magic Mind, it is the perfect time to try it. If you don't like it, understandable. But if you get the subscription for 1 month, you will pay just under what you pay for 15. At least for the first month, try it. It's very good. Not available in New Zealand, I know, but it's available in 100 companies. Please like the video, share, subscribe. If you want to know more about this, let me know. Ask a question. You have my contact details, they're right there. Please, I beg, start thinking about your future. Start investing in yourself and investing in your future. Don't do what I didn't do for years. For years. I lived paycheck to paycheck. I spent money frivolously. I don't want you to do the same. And if you are doing that, pay off your debt. Pay off your debt, please. And then invest in yourself. You can see I'm literally less than 4,200 away from being at $100,000 invested because of my KiwiSaver. That blows my mind. That blows my mind. I never thought this would be this high, let alone that it was at 90,000 a year ago, and in almost a year, it's almost back to what it was. So I've almost gained $10,000 in a year. And that was with me not even investing anything. And that's the other thing. That's me not investing in my KiwiSaver at all. Not putting any money in. Because my other provider have only just made it available. So for 20 years, I wasn't able to put any extra money apart from going through my business and going, hey, MB, who I used to work for, can you increase my voluntary donations? Now that these guys are going to be bringing in voluntary donations, you can be sure that I'll be taking 10% of my weekly pay or fortnightly pay that I get and putting it into KiwiSaver. Because that's all I did at the end. This grew 30,000 for putting 10% in every year. 10% in every fortnight, sorry. Like $200 a fortnight. It grew 30K. That is the power of compounding. Please. I love you guys, as always. Like, share, subscribe. I know I've already said it. Say it again. Please do it. There'll be a playlist on the screen. It'll pop up very shortly, or it'll be up now. It is basically my playlist of this stuff that I talk about. Investing in shares for a dummy, by a dummy. I've learned this stuff, and I want to teach you. I'm not a financial advisor. This is just stuff that I've been focusing on and trying to work on. I tell you my losses. I tell you my wins. That's all I can do. So as always, love you guys and good luck. See you next time.